I'm Mike Baker, the managing partner of Dent Moses, joined today by one of my partners, James Moody, and Nicole Reed. Nicole is a longtime SBA lender. She has been processing loans. In addition to that, she's serving as a consultant for a couple of local banks. It's been great to have her involved since she is on the front lines. We're going to talk about a couple of different things today. We're going to give you an update on the Paycheck Protection Program, what's going on, and also mainly focus on the mechanics of it, the forgiveness. So we're going to go through that. We've got about, 35, 40 minutes of material, and then we'll open it up for questions. Some of you have emailed me questions. Feel free to use the chat feature and send more in, and we'll try to get to all those. There's a lot of commonality, and I think you'll really benefit from listening to the Q&A simply because what I've found is everyone has the same questions. We're going to start out. Nicole, will you give us an update on the program and what's going on?
Sure. Good morning. Where we are today is in the second round of funding. The first round with $349 billion, the money went out in 13 to 14 days, which was extraordinarily fast. This round we have $310 billion. We're not quite sure how much of that's already been appropriated since it opened up on Monday. Basically, the program, which has been extremely popular, offering forgivable loans, but it's been fraught with two major problems. One is infrastructure, and the other one is overall guidance. And the infrastructure problem has been the ability for the banks to mobilize all their personnel and their resources and to accept these applications and to submit the applications to SBA through the SBA E-Tran portal for approval. So that portal didn't have the bandwidth to accept the volume of applications. It got overwhelmed the first round. For the second round, we were promised that would be corrected and that everybody could get back online and that the process would flow more smoothly. And unfortunately, it didn't happen. Monday was when it opened up for the second round was worse than the first round. And I think it's because most of the banks figured out how to do batch uploads as opposed to keying these applications in one at a time. Even the smaller community banks learned how to do the batch uploads, and the volume coming in on Monday was far greater than it had what was going in the first go round. That's the bad news. The good news is it seemed as of maybe even Wednesday that it had opened up a good bit, and the applications are flowing through and things are really improving. So if you haven't heard from your lender yet to your application, but you've already submitted it, I think you can feel confident that it's in process and the system is slowly working through those. The other issue, general oversight of what's going on with the program, is a lack of specific bright line guidance on who was eligible, the implications of taking the loan, how to calculate the loan amount, when to apply, and then how the forgiveness is going to be calculated. And I think the focus of today is mainly going to be to talk about how we expect the forgiveness calculation to be laid out. We don't really know yet, but Mike and James are reading the CARES Act, and they're going through all the frequently asked questions that the Treasury has put out, and they're going to help you figure out what that is. I do want to tell people that the Treasury has got a website, www.treasury.gov, and all the rules for the CARES Act and the PPP loans, the frequently asked questions. Anybody can go onto that site directly and read all that information themselves, and they do update that frequently. That's my basic highlight.
Thank you. We're going to shift over and talk about forgiveness. And I guess the thing I'll say at the beginning is what I tell everybody is what we're going to tell you is what we know today, May the 1st, and what we think to be the case. We're having to guess on some of these items. It's frustrating in that we have clients who are halfway through their 8-week period and they don't have all the rules yet. So it's 10 o'clock on May the 1st. If you watch this tomorrow on Saturday or next week, you may want to check and see if there's been an update, because the information comes in sporadically, and they were supposed to release some information by the 26th of April, and I think we got 3 or 4 FAQs that only answered part of our questions. So with that, we're going to shift over into forgiveness, and James is going to cover some topics, and then he and I'll swap out, and Nicole just pitch in whenever you want to add some commentary.
Okay, thanks, Mike. So the first question that we're going to cover on forgiveness is, when does the 8-week period of time start? The law itself indicates, and some of the other information we found indicates, that it starts the day you receive your loan, the day you receive the money, which could be different from the day you applied, or it would be different from the day you applied. It could be different from the day you signed the loan paperwork. So it's, when does that money go into your bank account? That's really what we think that date is. Could it be the next day? Maybe, but I think it's safe to assume right now it is that day. We definitely need some more guidance. The AICPA has published a list of recommendations to the SBA. Now, you don't need to rely on those recommendations. Just know that the AICPA has sent this list to the SBA, encouraging them to implement some of the suggestions. One of those suggestions is that the SBA should give companies some flexibility in determining when does this 8-week period of time start. For example, if there's a mandated shutdown in your industry, can you wait to start the 8 weeks when you're actually able to work? As of right now, that answer I think is no. But you know, that could be coming, and unfortunately, if you've already received your money, you just got to assume that your 8 weeks has already started. So 8 weeks starts when you receive the money. The next question that has been around since day one of this is, are your expenses determined when they're incurred or when they're paid? Is this cash basis or is this accrual basis? Unfortunately here, we're also going to have to say, we just don't know. The law itself says incurred and paid during the 8-week period of time. That's the way I read it. There's really been nothing of any authority that says one is more heavily weighed than the other. We have heard maybe some non-authoritative guidance where we're asking different people at the SBA, or I'm hearing that different people have said, you know, if your payroll cuts off at the end of the 8 weeks, but it's not paid until week 9, because there's normally a processing time on payroll, it's paid in arrears, that might be okay. That maybe you don't have to pay payroll within that 8-week period of time, as long as it related to that 8-week period of time. But we really don't know anything for sure on that. Likewise, at the very beginning of the 8-week period of time, you may have paid a payroll on April 15th, which might have been a day or two after you received the loan, but the time period of that payroll was for April the 1st through the 12th or something like that. And so that wasn't incurred during the 8-week period of time, but it was paid in the 8-week period of time. So just know those questions are all still open. We know from an accounting standpoint that you can't incur and pay an expense at the same time. Expenses are almost always paid after the fact, or in some cases like rent, you may pay for it in advance. But there's always some kind of a lag. It's never perfectly lined up. As far as future expenses, can you pay a future month's rent? It sounds like a good idea. If you get your rent bill for July, the first week of June, can you just go ahead and pay that in June and have that count? Think about that, start planning for all those scenarios, and just hope we get some real guidance so that we don't have to be left guessing once we get to the very end of the 8 weeks. So my best advice for you right now is to assume the expense has to be both incurred during the 8 weeks and paid during the 8 weeks. So what does that mean for payroll? As you get towards the end of the 8-week period of time, I think you want to consider changing your pay date. If your 8 weeks ends on June the 10th and your payroll would be on June the 15th, you might want to start making plans to pay that payroll early on June the 10th just to make sure it counts. Now, if they give us some guidance as we go, we may not have to do that, But I think you want to start planning to make sure everything is incurred and paid during this 8-week period of time. You may have to do the same thing for a utility bill. If your utility cuts off, at the very end of the 8 weeks, but you won't receive that bill until week 9 or week 10 after the utility company processes that, you might want to start making plans to pay all of those early. Same thing with interest on your mortgage. You can probably go to your bank at any point in time and ask them how much interest has accrued on my mortgage since I made my last payment, and make a payment that day. So I would say at a minimum plan at the very last day of this 8 weeks, if you've got a mortgage that's eligible for this, you're going to want to have the bank charge you for that interest for that period of time. At least start making plans to do that. Or like I said, change the timing of payroll. You may have some expenses that are on auto pay. Your health insurance might draft on the 1st of every month, or some of your retirement contributions might go out on schedules. I think you should revisit every single one of those schedules just to make sure that you're not missing the 8-week period. If something is scheduled to be paid on 8 weeks and 2 days later, you want to bump it up 2 days so it counts in the 8-week period of time. That's at least until we get some more information about can this be on an accrual basis, or can we actually pay something after the fact. If we get that guidance, and I hope we do, then this might be less of an issue. Now let's talk about the payroll calculation itself, because I've heard a lot of people who might still be confused about what actually counts in payroll. The big picture is payroll is not the dollar amount that the payroll company drafts out of your bank account on the pay date. That's going to include all wages, including if someone makes annualized more than $100,000. That's going to include payroll taxes, Social Security and Medicare. Those aren't eligible. It could include all kinds of other charges, payroll processing fees. Those are not eligible. So what does the payroll include? It is the gross wages first, gross wages, hourly wages, salary, vacation pay, any kind of wage that you pay at gross, before deductions, before withholdings. Just how much do you pay this employee? Their hourly rate times their hourly wage, but it can't exceed more than $100,000 annualized. So if someone makes if it's monthly and they make more than $8,333 a month, then that's more than $100,000 annualized. So if any employee makes more than that, you prorate their pay down, or you reduce their eligible pay down to whatever $100,000 annualized would be. But if you get to the end of the 8 weeks, a lot of people have asked, how do you calculate over an 8-week period of time was someone over $100,000? They have not published that yet. I think there's a few good ways they could answer that question. One of those is they could say you generate a payroll report out of your system that shows how much each employee made over the entire 8 weeks. And if any employee made more than about $15,300, that would be more than $100,000 annualized. And so you would reduce it on the 8 weeks as a whole. They might say the law itself indicates that you should look at that pay each pay period. So depending on how often you get paid, if it's semi-monthly, then if someone made more than $4,166 on that semi-monthly paycheck, then that would be more than $100,000 annualized. Or if it's weekly or biweekly, you would adjust that number. But that matters if you let's say you pay a $500 bonus to someone on one payday, and that $500 puts them over the $100,000 annualized for that pay period, even though it doesn't actually put them over $100,000. So the mechanics of how that works, one, we just don't know right now, but you can at least see how there might be a variation in how that could work. So as I said, no employer portion of Social Security or Medicare counts in that. Do bonuses count? That's a question we're getting a lot. What about hazard pay? Does that count? What about any kind of pay that you would not ordinarily do? As of right now, we have not seen any prohibition on things like that. But the best advice is you probably need to do what you would ordinarily do. If your industry is paying hazard pay because your employees are working out in the public, is public facing, then it's probably okay to do that. I don't imagine they would say that's not okay. If you see you're going to be $50,000 short of spending all your money, and so you just decide to bonus out all $50,000 so you don't have to pay it back, that might be a really good planning strategy. It might also be viewed as defrauding the federal government. And I hope it's not, but just know if you're making those plans should be tentative for now. I don't know how they're going to go. I surely hope they give guidance on that, but we really just don't know. Health insurance, the employer portion of health insurance also counts in this calculation. The employer portion of retirement contributions counts. We do not know what happens if your company normally matches and pays that annually instead of each pay period. Would you need to make a special contribution if it's cash basis? You know, I hope they say this has some accrual basis for that, but we really don't know. Partners in a partnership or S Corp owners count in the business's calculation. So it'd be based on the partner's K1 or the partner's guaranteed payments or the S Corp owner's wages. If the S Corp owner does not pay himself on the W-2, then nothing counts for that S Corp owner. It would be whatever's on the S Corp owner's W-2. And also know that if you're self-employed, those rules are a little bit different. We're not going to cover all the specifics of that right now, but just know when you applied for the loan, you should have completed the 2019 Schedule C, even if you haven't filed your return already. Your self-employed wages are also limited to $100,000, but those rules as far as what else counts for payroll, as in health insurance or retirement contributions, those are different than employers with employees. They're also different for self-employed individuals who may also have employees. So you've got companies with employees, you've got self-employed individuals, then you also have self-employed individuals with employees. And all three of those calculations might be different. And we can't get into all the specifics of that right now, but just know which bucket of those three do you fall into, and make sure you're asking and making sure that you're making those calculations correctly. So that's what we're going to cover on payroll, the payroll component of the calculation. The next piece is rent and utilities. I kind of view those together, and in real estate at least, they tend to go together. But one question we're getting a lot is the rent just for your office or for real property, or is it also for personal property? Once again, we don't know the answer to that question. The law says that the rental arrangement or the lease needs to be in effect on February the 15th, 2020. So it can't be a new lease or a new rental arrangement. But it does not say if this is real property only, or does personal property, do your trucks or automobiles, or maybe your office copy machine count in that? I don't know the answer, but I've seen that question a lot. You may want to start just adding up what else do you rent or what else do you lease in addition to your office space, in case they clarify that. What about related party rent? What if you own the building or a related company, a family member, or you own the LLC that owns the building? As of right now, they have not prohibited that. They have not said related party does not count. Just know it's a question that's out there. As far as utilities go, the easy ones are telephone, internet, power, gas, and water. So those utility bills that you paid. I've heard that cell phones it's been said that cell phones will count as telephone. I think that's reasonable. Sounds reasonable to me. There's one other utility though that you'll read if you read the law, and it says that transportation is a utility. I'm getting a lot of questions about what is transportation, what does that mean as far as a utility goes. There has been no answer to that question. I see two possibilities. One of those, which everyone on this call would probably like, is that would be your fuel for your trucks, or the cost of actually transporting you or your employees for business travel around the country or around the city. I don't think that's what that's talking about, but that's one interpretation. The other is that in some jurisdictions or in some municipalities, they actually send businesses a bill each month, like a utility, that's intended to pay for transportation costs. At least here in Alabama, most of that's paid through taxes that we pay, fuel taxes or income taxes or personal property taxes. But in some jurisdictions, they bill businesses for that like a utility. I think that's probably what it's talking about, but we don't know. Also know about utilities, as I said earlier, cash basis or accrual basis. Your utilities might need to be prorated. You know, if they cover 2 full months, or if it covered part of the month before the loan was given, and then part of the month after the 8 weeks expired. You know, like other expenses, these might need to be prorated. You might want to start thinking about making plans to pay your utility bills on the very last day of the 8 weeks, or at least what's been accrued for that period of time. So that's what I've got on payroll and rent and utilities. Mike's going to talk next about mortgage interest and maybe even non-mortgage interest. Go ahead, Mike.
Yeah. James alluded to the interest on mortgages incurred prior to February 15, 2020 is deductible. There's a little bit of misconception here in that they use the term mortgage, and there was some guidance that came out the middle of April, I believe, and they used the term mortgage in personal property, which is really not a customary term. So what we think is that, for example, if you have a car loan or business property that you purchased and that obligation was incurred prior to February 15th, that interest might be deductible and eligible expense, but may not be forgiven. But again, we're waiting on guidance on that. The only thing I'll say about the mortgage interest as it relates to property, that's a little bit of an unusual situation in that customarily, most of our clients and most businesses don't hold the real estate in the same entity as the operating company. So probably what's going to happen with that is that deduction is really going to come into play in terms of the related party rent. Now, we're going to talk about documentation a little later on, but one of the things to keep in mind on the mortgage is if you do have some deductible mortgage interest, write 2 checks for the mortgage payment, one for the principal, one for the interest, so it's easier to sort out later on. We're going to switch gears and talk about headcount, full-time equivalent employees. Now, this term, and I hate to keep on saying this, but we don't have clear guidance on this. The CARES Act used the term FTE or full-time equivalent employee. However, it's not defined in the Act. And there's several different ways to calculate FTEs. However, what we think at this point in time, unless Nicole, you or James have a different theory, is that they're going to use the Affordable Care Act definition, which means a 30-hour. So let me give you an example, a simple example on that. Let's say you have 10 employees and 7 of them work 40 hours a week. So those employees, those 7 work over 40 hours a week. They would each count as an FTE. Let's say the other 3 employees work 20 hours a week. So together that's 60 hours. If you divide that by 30 hours, you come up with 2 FTEs. So you add that to the 7 full-time, and you have 9 FTEs in that example. Now, this is really one of the hardest parts of the calculation because, as you can imagine, for someone with a lot of employees, that's very cumbersome to determine. Some of the payroll services have run reports. We've seen a lot of those to be incorrect. We're going to talk about the documentation, but one of the things that I would say is you need to start looking into that now. We were planning on having a template to calculate FTEs. We had held off because we were waiting for clear guidance. It may be we're going to go ahead and produce something and get it out there to calculate it. But your first stop should be with your payroll company or payroll provider. and see what they have available. Regardless of how you calculate the FTEs, if you're using a 40-hour week or you're using the ACA definition, as long as you're consistent, I'm not sure that it's going to make a lot of difference. You could possibly run it both ways. One of the questions that we've gotten, and Nicole, you and I talked about this, on the application, there was a question, I think it said the number of jobs, maybe. It didn't say number of employees, and it didn't say the number of FTEs. I've had a lot of people ask, am I going to be bound by that number? I don't think so. Because it really, I didn't find that it was relevant to anything. I think they've published this guidance. When we get all of it on the FTEs, that's going to determine it. So let's say you calculate your FTEs now. There are two different measurement periods. You can use January and February of 2020, or there's a period in 2019, which is February 15th of 2019 through June 30th. What you're going to want to do is calculate your FTEs, your average for that period of time. And going back, one of the things that's difficult about this, that's average FTEs. So let's say, for example, you've got an 8-week forgiveness period. If you pay weekly, you're going to have to calculate that FTE count 8 times, once for each week, and average those numbers. If it's biweekly, you may only have 4. So for someone with a lot of employees, it's quite a calculation. And you may say, well, why is that relevant? Well, your forgiveness hinges on maintaining that head count. So let's say, for example, using our early example, you have 9 FTEs now, and you go back and you calculate your FTEs for the period in 19, and you do it for the period in 2020. One of them has 11 FTEs and one of them's 10. You can use the most favorable one, which in this case, the most favorable one is going to be 10. So your head count has decreased by 1, and it's a 10% ding on your forgiveness. So this is really a difficult issue because, as James mentioned early on, you have until June 30th to correct your FTE count. That, however, doesn't work for a lot of people. I talked to a restaurant owner yesterday. Well, they're still under a shutdown except for curbside. So we don't know when that's going to be lifted. And if it is lifted, they're probably not going to get back to 100% by June 30th. So is there going to be some relief in that? Don't know. I know their trade group is lobbying hard on that. So if your FTE count drops, it can be punitive. If you have a choice between reducing comp, not in excess of the 25% of your head count, you're probably better reducing the comp. Numerically, it's going to work better for you. James had mentioned the $100,000 cap, which is the only instance I know of not being punished for dropping the compensation more than 25%. And that 25% is measured per employee. There are a lot of people that thought they might be able to drop some 10% and some 30% and average it out. That's not the case. That's also for someone who does pay cuts and has a lot of employees. That's a very cumbersome calculation. We're going to shift over and talk about documentation. We talked a little bit about that. What I would say is when all this started and people were applying for the loans, it was a mad scramble to get information. A lot of people don't maintain copies of their payroll journals, their W-2s, their quarterly reports. Now, I mentioned that measurement period, one measurement period is in 2019 and one is in 2020, January and February 2020. My recommendation would be get all of your payroll records, returns for 19 and 20 year to date, just so you have them. And that would include W-2s, payroll journals, quarterly tax returns, go ahead and lay your hands on all of that right now. So you'll have it and you can start working on these calculations. Most people, the best practice has been, and a lot of banks have done this automatically, they have put the funds in a separate account so that it can be easily tracked. Some of them are even handling a lot of the disbursements. You want to be sure that when you make a disbursement out of that account, it's for one of these eligible expenses and that you have the documentation. So whether that's a paper file or you want to set up an electronic file, go ahead and collect that documentation now as you move along. At the end of the 8-week period, you're going to want to go ahead and submit for the forgiveness. I don't think there would be any reason to wait. The banks have, I think, 60 days, Nicole, to respond to your request for forgiveness. And then I think there's an additional 90 for the SBA to review it and respond.
Yes.
So you're going to want to have all that. So if you don't have a separate bank account, just be sure that when you disperse it, it's for an eligible expense and you maintain all of that documentation. On the payroll, as James mentioned, you may transfer money over to disperse a payroll, but there are a lot of things that are included in the payroll that will not be forgivable. The payroll fees, the FICA, the Medicare, all of those items. James, can you think of anything else on documentation?
You may want to even ask your bank, what if they might have any special requests, or if they probably have a letter that they've sent out that will tell you, here's everything they're going to be expecting for you to turn in.
And I think that's one thing that's been a little bit punitive about this lack of guidance. I know I've seen a couple of forgiveness templates that banks have prepared. I'm not sure they've sent those out because they really don't have all the rules. And at this point in time, it's time for people to start working on that. I know we have some people that are in the middle of their 8-week period. So their forgiveness period is going to end pretty shortly.
That's right. And if you've seen the Dent Moses template, and I hope you have, but that's why it's full of disclaimers all over the bottom of it. We actually did put ours out there, but we really just don't know if it may be no good, but it's the best we have right now.
Yeah, we'll add to that as we have information. James and I talked this morning. I think we're going to probably go ahead and set up an FTE calculator. So if people can start on that calculation, or if it's not available through their payroll service. Next topic that ties into all this is you're going to want to go ahead and run a projection based on your expenses, your payroll and your other forgivable expenses to see where you are and see if there are any changes you want to make. We have the template out there. You're welcome to use that. And the question always comes up, and James mentioned this earlier, if I'm short, what can I do? And again, we're going to go back to standard business practices. I think you want to stick with that. I had someone call me this week, an engineering firm, and say, we have a guy who just passed his professional engineer certification. Normally, we would give that person a bonus and a raise. And my response was, if it's something that you normally do, go ahead and do that. But until we have more guidance, I really probably would not recommend stepping way out of bounds on that. One of the topics, and we're just about right on time, that I want to talk about, that I'm not sure everybody's going to be happy with this information, is the fact that it's always been a question of what's going to happen with all of this on the tax side. Congress was very clear when they passed the CARES Act that the forgiveness would not be taxable income. However, there's a code section out there, Code Section 265, that basically says if you have non-taxable income, you cannot deduct the expenses related to that income. And we've been mulling this around, and finally we have some guidance. And basically the Treasury or the IRS has issued a notice It's notice 2020-32, and I'll probably post it up on our website. It's 6 or 8 pages long, but there's really only a couple of sentences in there that matter. And here's what they say. Specifically, this notice clarifies that no deduction is allowed under the Internal Revenue Code for an expense that is otherwise deductible if the payment of that expense results in forgiveness of a covered loan pursuant to Section 1106B of the CARES Act. So you get the forgiveness, but you can't turn around and take a deduction for those expenses. And I don't think that most people were expecting that, but that's where we are. What's the likelihood of that being reversed? My personal opinion is probably not very likely. This program has soured a little bit, and I think in order for that to happen, Congress would have to step in. So again, the latest guidance we have is while your forgiveness will not be taxable, whatever expenses you have related to that forgiveness will not be deductible. James and I had a discussion this morning, and I'm not sure we agree 100%, but I think what you're going to find with that guidance is some people who are thinking about doing some things outside of normal business practices, paying bonuses, whatever, they may change their minds on that once they're aware of this.
Yeah, and I would also say that, it gets complicated, but not deducting the expense is the same thing as taxing the income. I mean,
Correct.
maybe not in there might be some limited circumstance where they're technically different, but broadly speaking, not deducting the expense is the same thing as paying tax on the income. So, Mike, you ready to move on to the next part?
Yeah, I'm just trying to let everybody absorb that bad news on a Friday, but yeah, James, I think our next topic is just current news and developments.
Well, that one that Mike gave just a minute ago, the bad news is the most current news and development. I just read it for the first time this morning. But as you've seen this week, and maybe even over the past couple of weeks, what was once touted as a free-for-all, Congress wants all small employers to take this and pay their people and maybe even stimulate the economy, not just funding small businesses that are struggling, but actually get some money out into the economy. We're now starting to hear some things from the Treasury, from the SBA, from Mnuchin, that really make us all concerned for a lot of the companies that may have not been as in desperate need of this money as some of the others. So should companies be giving this money back, or will they be painted in a bad light if they don't? The very first official thing that came out was FAQ number 31 that said if a large company has access to capital, maybe even has access to public markets, like Ruth's Chris, for example, should they take this money? And whether you believe a restaurant, however big they are, who's been closed down, should or shouldn't have taken this money, the SBA indicated this was not intended for public companies. I don't know if that was Congress's intent, but that's what the SBA said in this FAQ, or the Treasury Department said in this FAQ number 31. What's concerning to me, though, is FAQ number 37 said, what about a private business or maybe a smaller business that also has sufficient liquidity and also has access to maybe a line of credit, or the owner could put more money in, or the business has savings, and it can weather the storm? And it said, refer to FAQ number 31, the answer's the same. So FAQ number 31 says that you must have made your certification when you signed your loan paperwork. You must have made that certification in good faith. You need to consider your current business activity and your ability to access other sources of liquidity sufficient to support your ongoing operations in a manner that is not significantly detrimental to the business. So you made an assessment, you made a statement that said the current economic uncertainty makes this loan request necessary to support the ongoing operations of the borrower. The question to me is, did you make that statement in good faith, or did you make that statement in bad faith? I do believe that the Congress intended on this being widely used by all kinds of small businesses, not just those that were struggling with closing their doors or shutting down the business if they didn't accept the money. But that doesn't change some of the scare tactics that we've seen. Mnuchin came out and said that any loan over $2 million would absolutely be audited, and certain others below that amount, may randomly or some other systematically be audited as well. One of the questions I'm getting is, well, how does financial need play into this? Was there even a financial need measurement? There wasn't really the way Congress drafted it. The only way you get there is to say that word necessary. Was this loan request necessary? But there was no financial need in there. As a matter of fact, they removed any indication of financial need because there's normally a requirement that you're unable to obtain financing elsewhere. And they intentionally removed that, in my opinion, because they wanted this to be widely distributed. They wanted companies that had other options to benefit from this program. So, what impact will hindsight play if you get audited 12 months down the road? And as it turns out, there was little or no negative implication for your business from all this shutdown. So the only advice I can give you is, one, are you sure you were eligible? The employee thresholds. Were you a 501c3, or were you maybe a 501c6, which as of right now is not eligible? But were you an eligible business? Two is, what are all of your advisors saying? I've been telling all of my clients, reach out to your entire network of advisors. Ask them, am I crazy? Is this good faith or is this bad faith? You need to document all the different ways that your business was or could have been disrupted in a negative way. So again, you made that statement, that certification on the day you signed your loan paperwork. What happens after that, in my opinion, shouldn't count. So on the day you signed that loan paperwork, what kind of uncertainties were you reading about in the news? What kind of uncertainties were happening in your industry? Were people able to work like normal? Were they calling in because they didn't want to come for fears of being out in the public and getting sick? Were some of your competitors across the entire country having to shut down because something hit their business that hasn't made it to yours yet? Do you have events that you've already paid for that would be canceled? What were you worried about when you signed the loan documents? And you really need to document all of those factors just in case. Say, here's everything I was worried about, and here's why I thought this loan request was necessary, so that if any of these things did happen to me, I would be able to operate as close to normal as possible. And without that, I would not be able to operate as close to normal as possible. If this hit my employees, or if I were to shut down for a few weeks or a few months, I would have to stop paying employees. Or I would, that would just be the normal course of action. But this money is at least giving me the security to know that I will be able to make it through if something happens. There's no requirement in this that you prove your revenue stream was negatively impacted, or you prove your bottom line was negatively impacted. At least no requirement up until this point. I think it would be very bad for them to add that after the fact, but they're the government and we're not. So I think you want to watch it. I haven't talked to any clients that have already said by May the 7th, we're actually going to give the money back because of these scare tactics. But if you haven't at least considered that and documented why you think you were eligible for it and why you think you made that assessment in good faith, you need to go ahead and do that. And you need to go ahead and at least consider, if your business hasn't been impacted at all, what is your position? You might not have been impacted over the past 4 or 5 weeks, but you might be in 2 weeks from now or in 4 weeks from now. So as I think Mike or Nicole said earlier, I don't know how you're going to know on May the 7th any better how this is going to impact you than you know today. But you need to at least go ahead and think about that and start preparing for how you might document your concerns and your uncertainties when you apply for this loan.
I think that's good advice, James. And for example, I've talked to some people who had large jobs canceled. I would save those emails, whatever correspondence I had, and just build a file.
So we've got some FAQs. Do you want me to, or Nicole, were there any that you haven't answered yet that you'd like to go ahead and answer?
There are a few that I've not answered that I thought we would get your input, y'all to input as well. But simple ones first. I want to know where to get the template for forgiveness. Is that on y'all's website?
It is. We had a technical glitch with the website, and for some reason, the link going through is not working. We're working on that, but it's posted out there. Should be out there.
Okay.
It was sent in one of our email blasts as an attachment. And so if you haven't gotten it, just email either your contact at Dent Moses or me or Mike, and we'll make sure.
Yeah, we'll send it to you.
Okay. Okay. And then there seems to be a cluster really focused around what if their full-time employees are reduced during this time period because, well, you know, they were going to close down a branch before this anyhow, or they're seasonal, or I'm trying to read. We have one had a lease expiration, that kind of thing. If your full-time employees goes down during this 8-week period from when you applied the reduction, there'll be a reduction in the forgiveness amount. So if you're not using the loan funds to cover the payroll for the number of employees upon which you've calculated your loan amount for on the front end, then you would want to return those funds on the back end. So the whole point is you're borrowing to cover payroll for a certain number of employees that you stipulated on the front end. So if you don't have that number on the back end and you didn't need the money to cover their payroll, then in my opinion, you would just simply return it. You can't use this money for any other expenses other than what was explicitly stated on the front end, which is payroll and utilities and that mortgage interest. Those few items that were listed, and 75% of what you use has got to be for payroll. So you can't keep the excess for working capital or other needs.
Right. There's another aspect of this question, though, that's very broad. So what happens if you had a scheduled retirement on April the 1st and that person retired anyway? What happens if there was a termination for cause from an employee that was underperforming that needed to happen anyway? As of right now, the only answer is if your FTE count is lower than it was during the measurement period, either last year or January and February this year, you get penalized in this calculation in that the amount of your forgiveness is prorated down. I think those are all great questions. I really wish they would be answered in a favorable way, that you should not be penalized if someone retired right before this 8-week period start. I mean, or let me rephrase that. You should not be double penalized. You're penalized in a way in that you didn't spend the payroll dollars and you have to pay it back. That's not really a penalty because you didn't need the money, that employee wasn't there. So in my judgment, that's not really a penalty. But it is a penalty if then your FTE number goes down, and so you actually have to forego a percentage of what you actually spent. So the portion that you didn't spend, paying it back is fine, or at least understandable. But a portion of what you actually did spend being prorated down and having to be paid back because you didn't hit the FTE counts, that's punitive. And I have been telling a lot of clients that you really need to try to get your FTEs to hit those two targets, at least as all the rules are written today. You don't really want to be short unless they publish some special circumstances, you know, of why your FTE numbers were low. Okay.
Reading through these. There were a few questions about whether insurance, group insurance, dental, health insurance is part of the $100,000 compensation calculation. And it's not. The limit of 100,000 annualized per employee is cash compensation to that individual employee, such as regular payroll, commissions, and bonuses. The group health insurance and group benefits, employee benefits, are not part of that $100,000 cap.
That's right. And I've also had the question, Nicole, of auto allowances. You know, is that included? And you're right. Yes, that would be subject to the $100,000 cap because it's a cash payment.
Yeah, it's considered a wage.
I've got one here that was emailed into me. What if I don't use all the funds prior to the end of the 8-week period? Is there a penalty, or can I just repay the unused balance and accrued interest? And I think the answer is there's no prepayment penalty, so you could repay it at any time.
Right. I think a lot of my clients have been talking about just paying it back immediately once the forgiveness calculation is made. So go ahead, Mike.
The second part of their question was, can I use funds to pay regular bonuses? We've talked about that. I think if you customarily pay a bonus during that 8-week period for whatever reason, I wouldn't be concerned about that. But again, I would not want to, with what we're seeing now, I wouldn't want to stray outside of my normal business practices.
So we've got a question here about FICA. Employer portion of FICA is not counted. Employee portion is really not part of the calculation either. You don't make any adjustment for FICA at all because the starting point is their gross wage before deductions. So neither employee nor employer portion adjust this calculation either way. We've got a question about rent. If your 8 weeks spans 3 different months, you know, the last part of April, all of May, and the first part of June, can you pay 3 months of rent? You know, we really don't know the answer for sure. Is it cash basis or is it accrual basis? We think there's a chance they'll make you prorate all 3, or at least April and June, and you would only count, you know, the last 2 weeks of April and the first 2 weeks of May. But I think you want to start planning to pay for all 3 of those months during the 8-week period, just in case if they do release rules, you'll at least have your payment in that month. Or if they don't release any rules, then you'll have 3 payments that you could potentially count.
Well, we do. Nicole's partner, Jan Roberts, emailed the SBA, I don't know, Nicole, it was a couple of weeks ago, with a question on this very issue. We didn't get a very lengthy or fulfilling reply, but we posed the question of this whole issue of expenses on the front end or the back end. And it's just such a mess because you can't call Alabama Power up and get a cutoff statement. And so what they indicated was, their indication is they're going to do this based on the accrual basis. But we obviously don't have any published guidance. It is going to be, if they do not, it is going to be such a mess.
Yeah, if you get to the end of your 8 weeks and know that you're going to make your rent payment in week 9, you know, if we don't get any guidance, I would strongly encourage you to go ahead and pay that rent payment a week earlier than you were planning to, just so it counts. We had a question about what if your full-time equivalence goes down after the 8 weeks ends, but before June 30th. So as I read the law, again, no real guidance here, but as I read it, your first measurement period is the 8-week period of time. And if during the 8-week period of time, your FTE counts are high enough, or they're more equal to or more than the comparative period from 2019 or January and February, you're okay, even if your FTE counts later fall after the 8-week period is over. As I read it, the only time June 30th counts is if you're short during the 8-week period and you weren't fully staffed because of layoffs or furloughs, or you were closed down, if you were short during the 8-week period of time, you have until June 30th to restore your FTE counts for anyone who was laid off or cut back because of the coronavirus. So I don't think it's a problem if the FTE goes back down. Particularly, what happens if you're only paying people during this 8-week period of time because you have the PPP money, not because you actually have a lot of business to conduct. So I don't see that as really a problem if it goes down.
I'd say too, James, that I wouldn't lose sight of the fact that regardless of the loan proceeds and the forgiveness and the calculations, I think you need to be thinking about your business and do what's best for the business. I have a question here that, and I've had this question several times. They say, our cash flow is okay to cover payroll and other PPP approved expenses as we're working on projects that were in the pipeline several weeks ago. We're getting paid. My concern is that work's slowing down during this stay-at-home period, and our cash flow is going to suffer 30 to 60 days from now. Will it be an issue with moving money from the PPP account from payroll today and reserve it for when I think when I expect our cash flow to suffer? Yes, it would be a problem. You want to use that money during the 8-week period.
We've had some questions. I think Nicole might know this one about health insurance versus dental. I'm seeing some more questions about that versus life insurance, health, dental, all those different types of insurance.
The any defined group benefit, whether that's dental or health insurance or retirement, really even, those are all eligible. So if it's a group benefit that you're providing for all your employees, dental, there's not been an exclusion for that. You should include it.
I haven't seen anything that specifically addressed long-term disability or cancer or supplemental or life. Assuming those are paid by the employer and not employee withholdings, I'm not certain that those are explicitly included, but it is a question. I don't know if Nicole, if you know, like life and long-term disability, if that's paid by the company.
All the wording is any employer contribution to defined benefits. And then they go on to list a few of those: group health care coverage, including insurance premiums. So they haven't listed every single type of benefit that there could be. They haven't excluded any either.
That's right.
And that's an example of things that are frustrating, in that we're not talking about someone spending hours drafting that guidance. These FAQs are usually pretty brief and to the point. It wouldn't take very much effort to clear that up.
And these FAQs can be found on the Treasury. I said it at the beginning, but they can be found on the Treasury website. You just go to the red ribbon for COVID, and then they'll have all the FAQs there. And specifically, this is question number 7, where they talk about how payroll costs are defined. And they could have added a few more words to it. They did not.
Nicole, one question I had that wanted to get you to comment on, because you and I have talked about this. Do you think that as the loan program winds down, that the SBA is going to pretty quickly divert their resources to answer a lot of these questions? I mean, is there any expectation on that?
I think so. The SBA has been overwhelmed with this program. SBA is always run on a limited number of personnel, on a shoestring, so to speak. And so when Congress asked a smaller division to handle this volume, they were overwhelmed. And they've done a good job of pulling the resources together and answering it. Unfortunately, when Congress authorized this new funding, the second round for the PPP loan, they took it out of the normal SBA 7A loan program budget. So when the money all gets spent this week, I imagine on this round, the regular 7A program is going to be frozen, at least until, I think they said July 1st, or unless Congress gives them more money to operate. But if it is frozen, it frees up all that those personnel
Yeah.
to help on these. That would be the silver lining.
So we've got a couple of questions that might be pretty quick and easy to answer. Asked about a family member owns a building and the business pays rent. We don't have guidance, but it has not been prohibited. If that lease was in existence and it's on market terms, arm's length transaction, it's a normal leasing arrangement, and it existed on February the 15th, my answer is that it should count, but they haven't answered, or they haven't really answered that question either way.
I think that's true, James. The only thing I would say to that is I have heard some discussions with people saying, well, I can increase my rent. That's not something you want to do.
That's right. Yeah, just like on the payroll, there was one question, if you normally give raises or you normally give bonuses, doing what you normally do and you can document what you normally do, seems like that's okay. We haven't seen anything saying, that's not okay. I see one question about if you had 18 employees and one employee quit, there's not enough work to hire someone new. Do you need to hire someone anyway? To me, the best answer for that is if you can spend the money and you can get your FTE count back to 18, I think the mathematics of the calculation would show that you're better off to get your FTE count restored. But I wish that wasn't the case, but my best advice is the mathematics of the calculation makes you better off to have that restored. On the one hand, you just don't spend the money, but then you also have a percentage reduction. If you've got 18 employees and you're one employee short, then 6% of what you actually do pay out will also not be forgiven. So it's punitive if you're short.
Well, I think mathematically that may be the right answer. The other thing to think about is, does that mean at the end of 8 weeks, you're going to terminate that person you brought on because you don't have any work for them? So in that instance, while mathematically that may be correct, I'm not sure that's a great business practice.
That's right. Let's see. We've got some more. Some of them are kind of long and it's hard to read on the fly. Anything we saw about if the business owns a building or a condo with an HOA monthly fee, I don't see where that's necessarily covered anywhere. If there's a condo fee or an HOA fee, sounds like that might not count.
It might not count. I would assume that it would not count until they give us more guidance on it. This program is really not a business loan program. It's really intended to cover paychecks, and then to make sure that you've got a building to operate and you can pay for the power to be on is sort of the urgent way Congress approached this. And a lot of businesses who have applied in their minds are stretching this is supposed to benefit really the small business like a regular normal working capital loan would. And it's a different animal than that. So an HOA fee might not be considered rent or like mortgage. It might be considered just an ordinary business expense that would not be covered.
Well, chances are if they're paying an HOA fee, my guess is that there's water and sand nearby. And that probably just doesn't pass the smell test.
So we've got a really interesting question here about an LLC that pays maybe a guaranteed payment. And if the forgiveness income related to that is not taxable, then is the guaranteed payment that's paid to the member deductible? And if that's the case, if the guaranteed payment's not deductible on the partnership, then is it taxable to the member? I think that's a great question. I would love, if you know me, I would love to really dig into that question, but I don't know the answer to that question right now. That's a very good, a pretty deep question.
Yeah, I enjoyed that. I enjoyed that question too. So we'll have to run the math on that.
I think there might be some lawyers and accountants that are operating as LLCs, that are operating as partnerships, that might want to play through that one. But I think it's a great question.
Nicole, let me ask one question as it relates to forgiveness. I know you're talking to a lot of the local banks. I'm assuming that I don't know what their attitude is going to be towards how deep they're going to go into all these documents. It would seem like it's going to be very difficult for them to spend a lot of time on it. As you pointed out at the beginning of the discussion before we started, they don't have any liability in this process, and I can't imagine they want to be turned into policemen to look at all this.
Now, there are a couple of problems with the way this has been rolled out for the lenders is the volume of requests that came in within a 1 week period was, extraordinary. And they had to fund these loans. So the applications came in a frenzy because everybody said, you got to get in line, you got to apply immediately. The money's going to run out, and the money did run out. So all the applications came in within, say, a 1 week period. And then they had 10 days to disperse those loans. So then the banks had to figure out how to get the money in everybody's hands. And then from the 10 days, the 8 week period started. So everybody's going to have pretty much the same end to 8 week period, which means the same volume of people who applied on the front end are going to be asking forgiveness on or about the same time. And I really hope that banks are back to business as usual 8 weeks from now, but they could still be under, shelter in place and half staff kind of situation. And this side of it, calculating the forgiveness and reviewing it, takes more man hours and more resources. I think it's a more complex review than the front end application was. So I don't know how much SBA can really expect, or Congress and the banks, to be able to literally physically be able to do in terms of auditing and reviewing these files, other than a cursory one to ensure that all the information is there and that the borrower is certified to its accuracy. But that forgiveness package does go back to SBA for somebody there to review and audit. So I don't know. It's going to be a volume problem.
Yeah.
Nicole, we had one question that you might be able to answer. It says, if you're a lender but not normally approved under 7A, are they eligible? Will their forgiveness status be in jeopardy?
Yes. If you are, and this was the source of so much confusion, and I barely touched on it on the front end, but who was eligible to apply for these loans and who wasn't. Everybody just sort of came out of the gate assuming if you had less than 500 employees, you were eligible. And that's not really what SBA says. If you were eligible for the normal 7A program and you have less than 500 employees, then you're eligible, except for we're going to allow nonprofits and we're going to allow religious entities. But they did not make an exception for lenders whose primary income is from interest or fees on loans. And holds a portfolio, they're not eligible. I would refer people to the SBA SOP, the Standard Operating Procedure Manual. And if anybody, when we get off, needs me to help provide individual assistance in reviewing their eligibility, I'm happy to. If you're a loan originator, if you originate home mortgages and you sell them within like 14 days of originating them and you get a fee for that, and you don't maintain them in your portfolio, you are eligible. But not a bank.
We've got one question about members of your household that someone has already been considering coming to work for the, let's just say, the family business. Is now the time to hire them? It might be, let's just say, for example, that they are a recent high school graduate and now they're available for employment and they weren't before. That set of circumstances might sound okay. Otherwise, if a member of your family member was an adult and just wasn't working, and now's the time to take some federal money by paying the family member, that sounds like a bad idea. Get your FTE count up, use some of this money rather than giving it back. It has not been explicitly prohibited, but I think you want to just look at the facts and how might someone else looking through the government's lens view what you did. But it has not been, explicitly prohibited.
I think that's a good point, James. In that first example, hiring them may be fine. I'd also make sure that I'm paying them a rate commensurate with their experience and it is in line with the other employees.
Yep. So we had a couple of questions related to commissions, or if there's a bonus that's paid, a normal bonus that's paid during this period of time. How do you determine if it goes over $100,000? As I read the law itself, it suggests that $100,000 determination is made each pay period. So it depends on, was it semi-monthly or monthly or weekly or bi-weekly? And if it went over that amount, whether commission or bonus or total pay, then you would adjust it. As I mentioned towards the beginning of the program, that I hope, or I wish they would write this to where you look at the 8 weeks as a whole, and you look at their wages paid, in total, and did it go over $15,300 or not? But as the law is written, I believe it says you look at each pay period, and how much would $100,000 annualized be on that paycheck or on that pay period.
Thanks. One thing, and I don't remember if it was you I had this discussion with, but we have clients that have, for example, commission salespeople, and their volume has dropped off. So they're having to restructure their pay plan. And obviously, if someone's doing that and they've received their money, or they're at the beginning of that, they want to look at that and look at the pay periods, because there could be a trap in there, in that if you paid them a much lesser amount one week and you were redoing these pay plans and went over the limit, some of that could be disallowed in terms of the forgiveness.
So we've got one more question about your FTE counts. If your FTE counts as of June 30th equals the average FTE count, let's just say last year, will you avoid penalty even though you were short during the 8-week period of time? I think generally speaking that was the intent, and that answer is yes.
Yes.
The words that they use, like, do I have to hire the exact same people? Or what if, someone left and someone else came back? You could read it to say, you can only increase your FTE counts by June 30th for those people that were employed before that you rehired back. I really think that's what they intended. I think it's really, did you restore your FTE levels by June 30th? That's the way I read it. Nicole?
I agree. That's how I read it too. That head count number is, you have until June 30th to get that number back up to pre-disaster levels.
Right. And let's even say you were short during the first 4 weeks, but you hired 2 more people for the last 4 weeks to get your count back up. You should not be penalized for being short the first 4 weeks. You would be able to factor those 2 people in your average for the period. It's not really just a straight average for the period. You're not penalized for being short at the beginning as long as you rehired those people. Now, if you rehired those people towards the end of the 8 weeks, but then laid them off again before June 30th, that's where we're kind of at this, you'd rather not be in that situation, but we understand some people just will be. And it's not very clear to me on that.
On a different issue, nobody asked about this, but leases, if you were in the middle of a lease that normally you were moving out in the middle of your 8-week period and starting a new lease somewhere, only leases that were in place prior to February 15th can be included, and those funds can be included, in the forgiveness and in the loan amount. So I would caution, I don't know how many people are going to be out there who are changing leases or doing different things right now, but you need to look at that, make sure that they were in place before February 15th. And if you are leasing from yourself, or family member or associate of yours, and you didn't have a lease in place, a written one in place, but you've been paying the same amount all these years, you may want to memorialize that and have that in effect.
We had some questions about the YouTube link. Mark is helping us on the back end, and he has said that the YouTube will be available to watch later if you want to share that link, and we'll distribute that out.
James, do we have any more questions?
We've got a few still coming in. One said, what if an employee will make over $100,000 by the end of the year, but not year to date? And it really, it's not particularly relevant where they'll end up at year end. What matters is how much are they making during the 8-week period of time. If it's more than $100,000 annualized, then they're assumed to be over $100,000. Even if their W-2 is less than 100, but they made $10,000 a month during the 8-week period of time, that's over 100. So we have one question about unemployment, and it's more beneficial for them to continue collecting unemployment, but the company needs them in their FTE count. Can I hire different individuals while we are closed? Does that qualify? I've heard in theory, once you offer those people their job back, they should not be eligible for unemployment. But there's a lot of things right now that aren't happening the way it normally does.
James, I've had that situation with a client, and when you make that offer to return to work, if they turn you down, that is a voluntary termination. And the employer goes into the Alabama Department of Labor website under the new hire section and reports that. And in theory, their unemployment is gone. I think I'm hearing more and more of that, particularly if you have a lot of lower wage earners. There's some of those people who are actually making more on unemployment than they were working. So I think that's going to continue to be a problem.
But I think to answer your question, if you have that circumstance, I would encourage you at this point in time to find someone to hire to fill that role, so that your FTE count isn't cut short. There's also this question which we haven't covered, and that is, if I furloughed someone, that means they're not counting, or I laid them off, they're not counting in the FTE count. They're also making 0% of their wages. And there's this rule that if you're making less than 75%, that also counts against you. I don't think the intent was a double whammy where you have to prorate the forgiveness because you're one FTE short, and then also reduce the forgiveness because you have one employee who earned 0 when they had earned 100% before. To me, that question is still out there, but I don't think the intent was that you get double penalized.
I don't think so either, James. I think if it's a furlough situation, I don't think that counts as a cut in their wages.
Yeah, I think that's only for employees that are still working, but not making at least 75% of what they were before. Okay, that's everything I see. Mike, Nicole, you want to wrap it up?
Sure. Nicole, do you have anything?
I don't. Just my only advice to everybody is to maybe check back to the Treasury website and check back with Mike and James to see as the rules unfold, what becomes available to us. And more information will be coming in the next few days, I'm sure.
Thanks for joining us. I think what we'll probably do is when we do get additional guidance, we'll probably do this again, provide an update and a forum for people to ask more questions. Again, that template is on our website, dentmoses.com. We're going to work on an FTE calculator that we'll put out so you can check that. And then as we get more guidance, we'll put it out there. So thank you for joining us.
Thanks, everybody.
Bye, everybody. Good luck.